The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 22nd marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, that's something that we must master each and every day. So let's begin with a few empowering beliefs. The first one, sponsored by none other than Vincent van Gogh. He says this: whoever loves much performs much and can accomplish much. And what is done in love is done well. Make sure you love what you do, folks. The next one, brought to us by Aristotle. And he goes on to say, first, have a definite, clear, practical ideal, a goal, an objective. Second, have the necessary means to achieve your ends, whether it be wisdom, money, materials, and methods. Third, adjust all your means to that end. And how about number three? I love this one. This is a Chinese proverb. The person who says it cannot be done should not interrupt the person who is doing it. Oh, I love that one. You know, folks, success leaves clues, and that's why you want to understand patterns, candlestick charting out there. It's why you want to understand how to read the message of the market. So let's go read the message of the markets right now. We've got the Dow trading up 12.5 points at 15,531. S&P totally flat out here at 1692. NASDAQ up 1.5 points at 3589. Russell 2000 down 40 cents trading at 1050. NASDAQ 100 up 3 points at 3047. New York Stock Exchange, the leader in the clubhouse, up almost 0.14%, but it's up still the leader, up 13 points at 9631. That's more bullish than bearish. You got a net advancing issue still. 305. So let's begin by taking a look at what's going on with inside the S&P. And we're going to first start off with taking a look at the ES Mini now. I got a sell signal here last night that confirmed actually at 10 p.m., one of my favorite sell signals out here. And there's a second one that I absolutely love. Over the weekend, we had the perigee lunar phase come in, and I marked that. You'll see me mark that on my charts out here. In this case here, because it came in that I believe was around 4:30 or so in the afternoon. It's either the perigee line is either the open or of yesterday's session or the close of Friday's. Well, they both were neck and neck, so it didn't matter. That means the mark of 1690 out there. And that is a key. Now, it's not a swing point. No. But it's more important than a swing point. It has more value than a swing point. So that's a black horizontal line going across my screen out here. Now, if we take a look at, you'll also see some blue diagonal lines. This is a 30-minute chart that we're looking at. And I'm going to take this all the way back into the lows that were produced on the June 24th session out there. And so those blue lines represent the price channel. That price has been moving up inside. On Friday's session, when the market really had the opportunity to truly push lower, all that really happened, first it had set up two Gartley buy patterns. The first was a 0.618 Gartley buy. That came in at about, around 9 o'clock in the evening. 10 o'clock in the evening, my apology. 10 o'clock in the evening on July 18th, which was also a 0.786 Gartley buy. So you have two Gartley patterns that were forming at the same time. There was a little bit of a push down as our markets opened at 9:30. And where the markets pushed down into was the bottom of that rising price channel. This rising price channel had been drawn in long in advance out there. So as the markets were pushing lower, that was when, Google had disappointed, so they were gapping down. Microsoft was gapping down out there, and all that our market was able to do on Friday was to actually push down in there. Now, my newsletter, if you're a newsletter subscriber, you know that I gave you really three areas where the market was going to move to, and I said I believe it's going to be the latter, and the latter was 1692 out there. And what did the market do? Well, got up to 1692 at the open yesterday, on Sunday, but actually closed out at the price level of 16. Well, it got to close at 1690, and that was after the market, the futures were down. Everybody thought that things were going to come to a little bit of an end out there, but all that it was doing was running into a couple areas of support out here. Now it completed that move. It completed that A to B equals C to up. It did that coming into the time frame here last night, right at the open at 1692 level. Bounced just a tad higher, created another pattern out there, a little divergence pattern coming in at 9:30 last night as it got up to 1694 out there. Got a little bearish reversal signal here right at 10 o'clock last night, and I didn't take the trade. Just didn't take the trade, and the reason I didn't take the trade was because of that parity line. I wanted more evidence that this market is getting ready to croak out here. I think that evidence may come in later today. If the market does close up at its session highs, that's where I'll look at going ahead and maybe trying to go ahead and sell the top. Won't back up the trucks here. Don't need to back up the trucks because I've got plenty of positions on the gold side of the market that are all doing very well at the moment. Now, if we take a look at what's going on here inside this morning, you can see price still not being able to break that rising price channel. That'll be key for me from the bearish side. Yes, we've had the relative strength index move down towards the oversold. Didn't get into the oversold position here just yet, but I'm going to need to see more evidence that this market is getting ready to start heading south. And south is going to be back down to the June 24th type area. So it's a good move down. That's at the 1553-ish range. You're at 1688. So you can afford to be patient when you've got a over 100-point move in the S&P 500 that could be coming at us. Hey, at a minimum, what you're looking at is going from the lows of June 24th up to the highs that came in last evening, and that's going to be at 1608. So that's an 80-point move in essence of what we would be looking at. So whether it's 80 or it's 100 points, I say you can afford to actually wait for some further evidence. And some of that further evidence is going to be how price handles this perigee line out here. As long as it stays below that, that's going to act as an area of resistance. Then I'm going to want to see it actually, tag and get below this rising price channel. That may be all that I need to see in order to say, time to take those shorts. By the way, they're iron, so they're just ready to be put on out here. Now, how are we going to put all that together? Well, we're going to take a look at the daily futures as well. And right now, what we can see is the daily futures has closed above May 22nd. All that's taken place so far today is a test of that high. Right? When you break a swing point, albeit on light volume, doesn't really matter. If you break it, you're going to come back and test it. In this case here, that's what we've seen so far today. So key also is 1685.75. Well, trust me, if in fact that 30-minute chart today were to close and break below that rising price channel, price will get back below 1685.75. What will that set up? That will set up a false break topside. Even though it's just a small break on Friday, still a break of that candle session, all-important candle session for May 22nd. As long as price stays above that area, you have to say, could move higher. How much higher? Well, you just start taking a look at expansions of swing points. You would just simply go from a 22nd high down to the low on June 24th, and that would say 1721 out there. I don't know that that's going to happen, but you have to be open to it so long as price stays above this area right here where we're at, which was the May 22nd swing point. Now, let's go take a look at the actual index. Let's look at the cash S&P, see what it is doing. That, too, also above its swing point high, which is 1687. It has not come back and tested it, the 1687 level, but we've got that test on the futures contract. That's good enough. What does that set up? Until you get back below 1687.18, you do not have a failure on the actual index. That sets up a potential expansion. That would be your 1.272 expansion. That would take you into about the 1722 level inside the cash S&P 500. So what would be bearish today? Well, certainly when you take a look at its open, getting back below 1687.18 would be in the lower part of the range and would form a bearish engulfing candle from Friday. The last time we saw any kind of bearish candle, it was out here on the trading session of July 16th. So that's what to be looking for there. How about the ETF? Let's take a look at the SPY. What is it that has to happen in the SPY? Well, in the SPY, 169.07 is the number, and that looks like that has been tested. That was the May 22nd high. So far today, intra-session low, 169.01. It has been tested, and so long as price stays above that, what does that set up? That sets up that it could move higher. Where would it move higher to? The first logical level, again, still nothing more than the 1.272 expansion of those swing points. 172.70 would be the number out there. I'm not convinced that that's what's going to happen if we do take a look at the markets. They are in the bought territory. They can move higher out here, and so long as price stays above 169.07, that would be bullish. That would be bullish as far as a further move north out there. And that could take place easily over the course of the next couple of days out here. What would be bearish? Well, one would be closing below 169.07. The second would actually be a bearish engulfing candle. That means a close at or below 168.52. You're at 169.36. So that's what to be paying attention to today when it comes to the SPY, when it comes to the S&P 500. Let's do the same thing here for the Dow. Let's take a look at the Dow, see what it is doing, because it is the one that is struggling out here. You had McDonald's out with numbers, and that was putting some pressure inside the Dow. If I switch over real quickly, let me see what is putting strength into the Dow. It's IBM. So the number one weighting, American Express, putting some strength into the Dow, Caterpillar, United Health. The weakness inside is McDonald's, followed up by Johnson & Johnson, Walt Disney and Company, Cisco. But it really looks like it is McDonald's that is, which is the number 5. Well, you got Johnson & Johnson's number 4, Disney's number 3. No, that's not right. I don't have the weighting structure listed here. So we'll take all that back. But taking out is McDonald's, Johnson & Johnson, and Disney. So what's the key to be paying attention to inside the diamonds? Well, 155.14 is the swing point high from May 22nd. 12 million shares. We had a close above it a couple trading sessions ago, but only 6.8 million shares. That was on July 18th. Friday's close was 155.12, so 2 pennies below it. 4.8 million shares. You're 155.07 today. You need to see it close below it. And there were no bearish candles here. So, yes, you had a rejection of a swing point, but on lighter volume, so that was bearish. But you didn't have a bearish reversal signal. Until the bears give you a reversal signal, I'm saying, I don't think so. All you're doing is testing. And that's what the feminine energy of the universe loves to do out there. But I won't get into that. Let's go take a look here at the actual Dow Jones Index and see what it is doing. We'll take a look at the numbers there. Right now, it is traveling out at 15,544.37. 15,542.40 is the number. That is a swing point from May 22nd. So it is above that area, albeit slightly. It's kind of above and below here as we speak right now. What would need to happen to be bearish? It becomes pretty easy today to fulfill its bearish reversal. That's going to be a close below 15,542 and a close below or equal to 15,524.27. That means the Dow only has to finish down, what, about 15, what did I say, 15,524, 15, 20 points, something like that. So it could do that in a heartbeat. So let's set up the more difficult test. The more difficult test is below the open of Thursday's session, and that would be 15,465.91. Close below that, and guess what? As the Beatles say, I'm a believer out there. No, it was the Beatles or the Monkees. I can't remember. The Beatles or the Monkees. I think it was the Monkees out there. When we get back, we'll take a look here at the futures contact real quickly. Let's go see what it is doing. Dow futures out here right now. They have rejected that May 22nd swing point high, which is the number of 15523. We'll be right back, folks.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and let's see. We did have a full moon come in, when was it? This evening. It's coming in at, let's see, 18, 14, 17. So that'll be 2:17 this afternoon will be the full moon out here. Now, I'm going to show you, I haven't really talked much about the full moon, new moon, the lunar stuff during the shows as of late, and the reason is because, for the most part, it ain't working. So if something's not working, I'm not going to spend my time or your time. I'm going to show you what is actually the coolest lunar chart out here. Those folks that are subscribers to my newsletter service there, they've been aware of this chart out here. And it's this. It's you'll see some if you're watching us on Tiger TV. Thank you so much for doing that. If you're listening on the radio or your mobile device at TFNN.mobi, you can always catch the archive of this show on Channel 10, and you probably would want to take a look at this stock chart here. Now, the elements, the lunar elements that I've got marked on this chart, it's a combination of full and new moons when they combine with moon conjunction of Pluto. So we're going all the way out to Disney World, Disneyland out here, and the blue boxes you can see have marked very significant lows in the marketplace. Now, there could be other aspects going on up in the skies, but what I can tell you is this. I can't tell you why it works, but I can tell you that it does work out here. Now, when price is moving down into those functions or into those lunar phases, doesn't matter whether it's a new or it's a full moon, and it's combining with the moon conjunct Pluto, and it doesn't have to be on the exact same day. It can be a day forward, a day back, or what have you, is what we'll see, is that they have formed significant bottoms. Look at August 10th, 2011, as the market was crashing down out there. Put in a significant low. We know that the market moved sideways up until the October time frame, but then the next significant low that was put in was on that 11/25, 11/27 time frame. That was the day after Thanksgiving back in 2011. Significant low, absolutely out there. About June 6th. June 6th, as the market was moving down, you had a full moon and you had moon conjunct Pluto out there of 2012. That put in a significant low. How about November 16th? November 16th, 2012. Guess what? We had the same set of combinations out there. There was a new moon and moon conjunct Pluto out there. Now, what do we have on June 24th? The amazing thing, as the market was pushing down, you had another one of those conjunctions. You had the moon conjunct Pluto as well as a full moon out here. Now, the last two, May 27th, so I'm going to go ahead and shorten this out here. May 27th, we also had a moon conjunct Pluto, and the full moon was on May 25th out there. And what that did, that put in a short-term market high out here. What has the market done moving into this one here, which is today's full moon, and moon conjunct Pluto, which came in yesterday? The market has moved up into it. With the market moving up into that aspect, just like it did back here in July of 2012, with the market moving up into it. Typically, these will put in good bottoms. But we can see back here the most recent one, May 27, 2013, as well as what we have going on here today. I can't tell you why it works. I can tell you that to ignore this chart would kind of be silly out here because it works so well. So we'll see. We'll come back. We'll pay attention to it. But to me, this is the second most important lunar chart out there, lunar phase. The most important is apogee and perigee in the marketplace. That also came in, as I mentioned, over the weekend out here. So that is our lunar update. Let's go check out the markets here. How about let's go check out gold? The sphincter muscles of those non-reportables, of the folks that are short, should be getting pretty tight right now, because you've got gold trading into the April 16th high volume low out there, and that's the 1321.50. We get a close inside there, and people who are short are going to have to say, now what? Well, I can tell you what. You're going to see a move up to 14.1560 out there, and then you're going to see 15.61. That's nothing more than a normal move. That's coming off of your September swing point high, October 4th swing point high at 17.97 all the way down to the low that was put in. And this here, folks, this could be one of these historic lows out here, the one that was put in at 11.79. Not just a low, but a historic low out there. That's what I think may be occurring out here. One of those nice, buyable, historic lows out here. And so right now, just the normal bounce is going to be 14.15. I suspect that what will happen is gold will get up into that level. That's going to be your swing points into the June time frame. And then you see a little bit of a pullback inside the market, and I say maybe, because the short covering rally, that one is going to be difficult to figure out just to what extent that could just push it all the way up into that 15.61, because the boat is so lopsided right now that those folks that are short are going to have to really, really start paying attention to Goldilocks out here. Silver as well. Silver also making a move northward. Silver's going to move into it's far away. You can see how much weaker it is. It's also going to move into that April 16th area, into that $22 range. 877-927-6648. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Pretty quiet in the markets out here. The Dow's off 15 points. S&P is flat. Composites up 4. Russell 2000 is flat. Well, it's flat in the market. It's not flat in the commodity market, the gold, silver market. You've also got Google up $10 right now, up $9.50. Apple's up $3 and change. Priceline up 6. Regeneron Pharmaceuticals up $6. Aetna Health up nearly 5. YRC Worldwide up $3.40. To the downside, Chipotle's off about $6, 1.5%. We'll go take a look at Chipotle because that thing had moved right into the area where it had broken down. McDonald's is off $3. Let's check in here on Accenture PLC, Ireland, and congratulations to Phil Mickelson out there, winning the British Open. What an incredible back nine that he had. The last 6 holes, watching him, especially the 3-wood that he hit, 300 plus yards into that hole on 17. That was just simply a beautiful shot. And I believe that Phil is one of his sponsors is Accenture out there. I can't recall if it's Accenture. I think that it is. In any event, let's go take a look at this. Stock ACN is the ticker symbol, by the way. We're looking at a weekly chart here, so take a look at the longer-term chart first. We're coming off of the rising price channel that's been traveling in ever since the lows that were put in back in 2009. But we can see here, so it doesn't look too shabby there. The thing to be concerned about is this high-volume high bar out here, the July 8th, that it has passed over. If this thing ever does fall out of bed, 63.66 is the top of that July 8th bar. That should go ahead and hold things in place. But if it does get down there, what it would be doing, it would be actually breaking the rising price channel that it would be traveling in, so that could be a problem. Other problematic also on this stock here is the June 28th candle. I don't know what happened there, but a wide-ranging bar with some volume to the downside. And right now, all price is doing is traveling with inside this bar. And the body of a candle truly is the essence of price. And the essence of this says price wants to go down and actually tag the bottom of the rising price channel out here. So it's just forming, perhaps looks like maybe the C point of the A to B equals CD down. If we were to try to figure out where this thing could perhaps bounce to, well, I can just go ahead and draw that in. So it could actually bounce all the way back up to the top and then back down to the bottom to make that move. Maybe it doesn't have to get all the way back up to the top of that rising price channel. But let's go take a look at the daily chart out here. The daily chart shows that big volume bar. Now, I've got a little bit of a some type of data feed or some type of issue here. So I'm going to switch over. I'm going to head fake, create a head fake for my system here. I'll just change it to a 6.5 hour bar chart out here because I know this candle right here is not right. It's a hammer candle, and that's the session from June 28th. Big gap down. That's the wide price spread that we looked at on the weekly chart. But I want to pay note right over here to this session from December 20th. That's at 69.19. So if I switch this over to that 6.5 hour chart to match the trading day, oh, now it's not there as well. Hold on a second. Let me refresh this thing. I don't know why I've got a little bit of a... there we go. So there's our hammer candle. So I have a little bit of a corrupt file out there, and I'm not going to correct that during the year. But it got down to that $69 mark. So it ran into that, and that area held as a support. Although it's a hammer, it's probably about the worst style hammer that you could get out here because you have to fill in this gap. And so by filling in this gap, looks like all this may want to do here is try to get up to the top of that level, which would be right around 79.84 before going ahead and perhaps careening back down towards the bottom of the rising price channel on the weekly chart. That was Accenture PLC out there. Let's go take a look here at, I wanted to look at Chipotle. So let's go take a look at Chipotle. CMG is the ticker symbol, and let's go see what it is doing. It's trading lower. Now, what it did, I guess not really too bad out here. Let me just refresh my chart, make sure I've got all the good data. So as we take a look at this thing got above, it gapped above with some decent volume. Now, the decent volume, you've got to take a look at it like this. You've got to put it in perspective. It was 2.2 million shares on that gap up on Friday, and it was really going against the breakdown that had 9.7 million shares. It did come into the area where it broke down, and it closed above that level. That was the high from July 19th. That was 1.3 million shares and 404.59 out there. So it's doing everything that it can, and everything that it can is dealing here with the June 27th area. That has 2 million shares out there, and the top is 414.91. Now, the low that it has out here, it's got a relatively high volume low down in the October 2012 time frame, October 19th, October 24th area as well. The only time we have seen really decent volume, we've seen two signs of strength in this equity. It wasn't off the bottom. It was kind of mid-stroke here. So April 19th is an area that should hold as support, 366.73. And then obviously the gap up here from July 18th. But if this thing were to have a bad session here, this is why you want to watch Chipotle, because, it did gap up, and if this thing were to gap down anytime here in the near future, next couple of days or so, meaning it gets below, it opens below 395.02 and never gets up there, what you'll have is an island reversal candle formation in an area where this thing last broke down, where there was just major institutional selling inside this equity. So got to be paying attention to Chipotle in the marketplace. Let's go check in on Google. I mentioned that was up a bit here this morning. That is actually the leader in the clubhouse. That's up $9. So we took a look at Google earlier. Google volume on its move up 1.1 million shares. Google just doesn't want to give it up. Maybe this is some market rotation into Google. It's certainly not rotating into Apple out here. But the move down on Friday, even though it disappointed on earnings. Now here's the interesting thing. I'll go ahead and do this for you. Google's one of those stocks that you actually can trade on earnings and get it right most of the time. And what I mean by that is if you're looking at my chart here on Tiger TV inside the den, I've got all of the earnings dates for Google out here. And what I want you to pay attention to, as we're just starting here back in April 15th of 2010. And when we can see Google came out with earnings, it gapped down the next day, and price just simply continued lower. Take a look at here, October 14th, went ahead and gapped up. It moved up a bit before it pulled back in to test the area where it gapped up into and then continued to move higher. Take a look at the earnings from January 20th, 2011. Disappointed. The stock went ahead and moved down out here. Take a look at the next earnings report, April 14th. Gaps down, continues its way down. And there's patterns that it's completing, A to B equals CD, patterns out here, tests of swing points. But the point that I'm making here is if you take a look at Google, it actually has a pattern that is just simply one of those patterns that if you take a look at earnings and the way that it reacts, it actually sends off a pretty decent signal. Take a look at the last earnings report that we had out before this past week. We had April 19th. April 19th, what does it do? It makes a low, and that's when it moved all the way up into the 900 area on May 16th out here. So now what we had is we had the earnings session come in right here. This is on July 19th. So let me go ahead and put this in here. So we'll update the earnings. Now, it doesn't work this way on all stock charts, but in the case of Google, so this was, I think it was the 19th. Right? Wasn't it July 19th? I think it was. So I'll put in, what's that Friday session? I'll put it, I'm in the wrong spot anyway, so let me close that out. So we're looking at July 19th, yeah. So let me come in and notate that on my stock chart here, and we'll pay attention to it. See, I need the green thing. There we go. So July 19th, and that was earnings. And so what we could be seeing here, based on its pattern behavior, is that because you did see it move down, we're seeing follow through to the upside today. It's coming into the area where it gapped down that only had 3.6 million shares. You're already up with 1.1 million shares in an hour and 15 minutes of trading. So it's coming back into that swing point with decent volume. We may have seen the low inside Google just simply based on the past out here. Now, what does that mean for Google? Where could it actually travel to? And you start taking a look at other patterns in the marketplace. Well, let's take a look. Is there a 3 drive to a top pattern that could be completing here? I don't know, but let's take a look at cycle time frames. We go from the March 6th level, March 6, 2013, to the high that was put in here on May 20th. And it says, okay, a 3 drive on August 2nd. At least that's a time frame. It looks like it's about a 1.272 expansion. So now let's actually go draw the actual pattern in, and let's go see if, in fact, that's what could be forming inside of Google out here. So let's take a look at this. This is what the 3 drive to a top would, from a timing standpoint, would look like. And then we'll go try to factor in the price. So right about there would be about ideal. And how about that? What you are looking at is you're looking at the expansion. So the expansion of the swing point from March 6th, from that high to about the low that came in on April 18th, the move up here on that second drive was about a 2.0 move. And what we just factored in here, another 2.0 move into about 993.43. So it looks like, just simply based on pattern, the patterns of how Google deals with earnings, its move looks like Google actually headed to the 993-ish type range out there. So we'll go ahead and keep watching Google. Of course, if that is in fact the case, let's go check in on Apple and see what it is doing. And maybe that break back below on the NDX and in the Qs back below the May 22nd swing point. Maybe it wants to actually go ahead and complete its move higher. So let's take a look at Apple, see what it is doing out here in the marketplace. Not doing a whole lot. Of course, the Qs would like Apple to do something. Of course, what the Qs would like it to do is actually move higher. The move lower on Friday with 5 million shares out there, nothing really huge from a volume standpoint. That was, quite frankly, in fact, it was extremely weak because that was going into sessions that had 11 and 12 million shares out there. So, the NDX, if you just take a look at Apple and Google, it's saying that it is not ready to bust things down. So let's go over and take a look at the ETF. Let's go take a look at the Qs. You got more in price line, which is a big equity out here. So the Qs here, that's the diamonds. Let's go take a look at the Qs, which we saw price move back into the bottom part of the range. If it can get back above May 22nd, which is 74.95, what it actually sets up is the A to B equals CD pattern. That would take up to 77.25, and I suppose that Google moving up and completing that pattern would most certainly help out the Qs to go ahead and finish this. So that's a 1-to-1 A to B equals CD out here. So the key today is going to be where do the Qs finish. If they get back above the May 22nd high, well, then at least the top here will be tested, meaning the July 17th area, because it was not enough to bust it down on Friday. It was going into an actual little sign of strength of 47 million shares on July 11th, and it came back with only 37 million shares out there. Let's go check out the sectors inside the S&P 500 here. Let's go check out the technology sector, even though we're spending a lot of time out here, but the technology sector, with it being the number one weighting in the S&P 500, there's reasons to be paying attention to it. So let's go ahead and close this up here, and let's go ahead and close up that line, because what the technology sector did here on Friday was it came back and it tested. We'll put the black line across the screen. It's a little sign of strength on July 11th. That was 10 million shares to the upside. And when it came back on Friday, let me just refresh my screen. Is that right, or am I seeing things here? There we go. No, it didn't. It came back actually with volume. It came back with 13 million shares. It was enough to close that gap. So unlike the Qs, the actual technology sector, but it was also going against this gap. This gap down, the top of this June 20th bar, which had 15 million shares. So looks like that's really what the test was that was put in place, and just still not enough to crack things to the downside out there. And so the technology sector could easily come back and close its gap up here from the July 18th level. So 31.92 inside the now the candle session today, no big deal. If you do get a close though above the high of 31.69, it's a little short-term change in trend out there. In fact, it would establish a uptrend inside the technology sector. So that's going to be key, is watching the price level of 31.69. That is on the XLK. As long as we're in this area, let's go check out some of the other sectors. How about the XLE? That baby is broken out. Broke out of the 0.786 Gartley sell. What does that set up? Well, it sets up an actual turning into a butterfly pattern. Now, the first thing it's doing, it's taking on the May 22nd swing point. 19 million shares. It was coming up there on Friday with this is not correct. Let me update my chart here. It was coming up there on Friday with about 10 million shares. So a little bit light in the loafers. Today, let's see if it's tested the high. 83.95 is the number. It's been up to 83.83, only 1.6 million shares. But looks like what this could be doing is more likely setting up a butterfly pattern after it makes its 100% move of a move. Let me get rid of this out here. And that would say that the XLE may want to travel up to 86.11. Of course, the key to that, let's go back to the core stocks out here. I should have ExxonMobil. I hope I have ExxonMobil as one of the core stocks for us to be paying attention to, and that had broken out of a 7-point trading range. Here we go. And it broke out, and it traveled higher on Friday. And so ExxonMobil actually wants to move up to the $9,900 level. It's at $94.92 right now. And I don't see any reason for it not to. It had some decent follow-through, 14 million shares on Friday's session out there. And that was breaking above a 15 million session day back in October of 2012. And more importantly, just as important, 19 million on May 22nd most recently here. So not totally busting it with volume, but it has broken the consolidation level, and no reason for it to not go ahead and complete its run to about the 100 mark. Right now we got the Dow is green. It's up $6. S&P is up a couple. We'll be right back, folks.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Let's try to recap here in the next 4 minutes. What it is that we're looking at. So, number one, we're taking a look at a set of lunar conditions here. Moon conjunct Pluto is combined with a full moon, let alone perigee out there that in the past has either marked significant bottoms or highs. Now, with the market moving up into it, just like on May 27th out there. We know we had the high come in actually on May 22nd out here. There was another little high that came in on May 28th, and the May 27th happened to be a weekend, happened to be a Sunday out there. So we got the same type of condition out here with the market moving higher, and this says that what we should be doing is putting in a high today. Today, maybe it was Friday out there in the marketplace. If we go over and take a look at the 30-minute chart out here right now, during this 30-minute session, we've had price move into the perigee line. That number is 1690 out there. The high so far in this session, 1690. Here's the deal. If you get a close above 1690 on a 30-minute chart, I'm going to say make it a little bit easier, make it a little bit more difficult. 1690.50. How about that? So we'll add another half a tick to it out here, and you get a close above 1690.50, and what that actually sets up, it sets up a potential A to B equals CD to take you to 1703. So 1703 would be its next pattern. That's what I would really love to see, because I'd love to be able to sell this market at a higher price. Now, the problem with doing that is you're going to be above the perigee lunar phase out there, and that's a real problem. And I mean it's a real problem. I'm going to go back here and take a look at the last apogee lunar phase that came in, and that was back here on, looks like right around the July 7th time frame. Price had moved down below it, much like we have here right now. Price had moved below it. Then once price got above that, it came back and tested a few times, and it was off to the races to the highs that we see here in the marketplace right now. So that's the other problem. So as much as I'd like to actually see that A to B equals CD pattern form out here, that presents another problem, because once price gets above that area, that has to make you say something to think about, especially when we took a look at the Qs and some of the other elements out there. So this one here for me is a little bit more difficult to call. I know what I'm looking at now. Let's just take the opposite of that. Let's assume that we've got some failures today. We set up the bearish candlesticks in the marketplace, and you get it closed below perigee. That says okay. Then maybe that high is put in. Now, one of the key charts out here is the New York Stock Exchange. We didn't talk about that today. You'd love to see, just to kind of put everything in place here, you'd like to see a spike up into 96.95.46. That's the May 22nd high, because the New York Stock Exchange is traveling inside that. It's traveling right now at 96.43. So to do that would be a heck of a move, another 40 points out there. But that would then complete its pattern in the marketplace. Right now with the New York Stock Exchange, it's not in traveling inside that May 22nd swing point until there's some other reversal in the market here. And right now, as we speak, the NYSE has got net advancing issues, still about the same, about 360 out here, but it is the leader in the clubhouse. NASDAQ 100 just right behind it, neck and neck out there. And that says the breadth of the market, the breadth of the move is still positive as we take a look at things out here. So for me today, not as easy as a normal call. Of course, we haven't looked at the currency pair, my favorite currency pair and yours, and that is the euro-yen, because that tracks the market the best out here. So let's go see if we've got any bearish signal inside the euro-yen. Oh, how about that? We do. Now that is something to be paying attention to, because we had the euro-yen complete the 0.786 Gartley sell, and what we see right now is we see a bear sash candle out here, a little bit stronger than a bearish engulfing. Interesting. You know what that says, folks? It says the top is in. Hey, stay tuned. Basil Chapman, he'll give you his opinion as well out here, but here is a good piece of information right there. That was the euro-yen. Have a great Tuesday, folks. I'll look forward to seeing you tomorrow morning. Take care.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.